We're here for another edition of the Beef Market Update with Ann Dunford. Welcome today, Ann.
Hi, Sean.
Okay, Ann, it's been a month since we last talked. What's happened?
Well, summertime, quiet on the feeder market, but we'll talk about how things I think are going to start to heat up as we go from here. And looking backwards, fat cattle market, I think we can pretty safely say the lows were placed in June, which is a fairly early low for normal seasonality, but I think the low is in, and markets are obviously moving higher since then.
So how is that feeder run beginning to shape up in the early days?
Well, very strong. I mean, runs have been very quiet. Of course, there's been very limited placements, I believe, in Western Canada for the last few months, and so there is a little bit of what I'll call some pent-up demand, I think, out there, but they're going to have a price tag attached to them because the supply looks smaller.
Right, so we've heard some early numbers how things are being placed. It's it's $1,100 plus first cost. And I could always had in my mind, over $1,000 is way too expensive. But we were talking off camera. You kind of need to get over that.
I think so, because I think everything's just kind of moved up a notch. So yes, are we paying more for our feed grains, whether we're talking barley or corn? Yes. Are we going to pay more for our feeder cattle? Yes. Are we going to get more for fat cattle? And if you believe the futures market and the premium structure going forward into 2012, I think that's in the cards too. So you have to kind of put the old numbers out. Does this mean that it's going to be easy? No, I think we've still got some narrow margins, but we're going to be playing at a higher field.
Yes. Yeah, so obviously we've got great grass conditions in Western Canada. What kind of effect is that going to have on this market?
Well, I think that's been one of the reasons, of course, why things have been so quiet. In our drought years, of course, we're very active through the summertime as producers are forced to sell off, and that hasn't been the case in Western Canada. Now, mind you, it has been the case in the southern one-third of the U.S., and we'll talk about that in a second, but what's going on right now is very quiet. You're going to start to see obviously some yearlings move here over the next few weeks. Behind that, often the calves are right behind it. My call this year is that the calves are probably going to be delayed more into, like last year, the run was more in November, December than early. So I think you're looking at maybe a big gap in between the yearlings and the calves, and so then that potentially makes a fairly good gap come next spring.
One of the stereotypical criticisms that people have had for the ranching sector is that they always market in the same week every year. With the grass situation, does that change? Will we see maybe some different decisions on when people market their calves?
I think we're starting to see some breakup from that for several reasons. Conditions out there as such that you can have some flexibility. Secondly, different marketing options available to the grassroots producer, whether it's through an internet type sale or forward pricing or those kinds of things. So there's more alternatives and opportunities to do something different than just selling the cattle the same week that you always have. And I'm not suggesting that they don't still move through markets, but I think there's more flexibility about when you do that.
Right. Okay. U.S. situation.
Yes, well, we were talking earlier, completely opposite. Of course, we've had this significant severe drought. Now, we used to say just in Texas, it's basically the southern third of the U.S. So from Arizona clear on through to Florida, we're in a big area. And if you want to put a number to that, Sean, it's going to be over 40% of the U.S. beef cow herd is in those states. So significant. And of course, we're talking water issues, feed issues, and those cattle have been coming to town. So we've seen, I think you're going to see this Friday on the U.S. Cattle on Feed Report, a very high placement number for the month of July, and it's strictly a drought placement.
All those cattle are being moved forward.
Yes. So instead of selling in Sepdoc, you've had these cattle moving early in June and July. So you're going to have a reaction to that, but at the same time, those cattle are placed and gone. The other impact, of course, to the drought has been big sales of cull cows. And so the cull cow price in North America has kind of been a little subdued because there's some big runs coming out of the southern third of the U.S.
What shape is Mexico in?
Well, right now, same thing. So we were also seeing large Mexican feeder cattle imports into U.S. feedlots, so that's inflating that placement number as well. So they're in the same shape. It's not good. And again, those cattle are moving to the U.S. going on feed now.
As we look at feeder placements, is Canada in better shape from a possible profitability standpoint than the U.S. feeder, or is it shake out to about the same?
Right now, it's interesting. I don't think I would have predicted this going back 3 or 4 months because of the higher corn prices in the U.S. But we have had a nice rally in the U.S. fat cattle market. I think both the U.S. and the Canadian cattle feeder are in reasonably good shape. It hasn't been, even with these good prices, it hasn't, of course, been a gold run, but at the same time, I think both are in reasonably good shape even with these high prices. So we'll probably trade U.S. fat cattle this week. I'm going to guess 117, 118, and break-evens are probably 15 to 18 in the U.S. So they're right at break-even, and I would suggest it's a very similar situation up here.
You mentioned the USDA report cattle on feed report coming out Friday. Is there any other numbers that we can expect out of that besides the higher placement numbers?
Well, the placement number, of course, then is going to lead to our August 1 on feed number. Our on total inventory in the yards in the U.S. is going to basically be recorded as, right now the guess is up 7%. So yeah, we're going to see bigger numbers. And of course, last week we saw the Alberta-Saskatchewan report suggesting it was up 5% for August 1. So current inventory in yards is large today, but the argument, or my argument, is for as large as it is now, it's going to be smaller down the road.
So based on the fact those cattle are, so many are being moved ahead, how much effect is that going to have on the marketing situation when those cattle are ready for fat sale?
Well, the futures market is trying to figure that out right now. So we did have some very big premiums in the deferred months, and as we've seen these placements come to fruition, as we've watched them come on feed, those big premiums have backed off somewhat. So there's still a premium structure, but not to the degree it was, say, 2 or 3 months ago. So I do think the futures market is trying to already predict that and has backed off, today closing just at the 120 and just over the 120 mark for Oct and Dees. As we get further into 2012, then I think you have, potentially a new test at some of the levels we saw this past spring.
When we look at the Canadian feeder cattle situation as that run begins, is there a lot of calves or yearlings being forward contracted or have been forward contracted?
I think there's been more interest every year. We see a little more interest in forward pricing, and understandably so. Look at the volatility we've seen in these markets over the last 18 months. It's been extreme, and it hasn't slowed up at all. So if there's an opportunity to do some pricing, I think producers are looking at a percentage of pricing. And then the other side of the coin is from a fiscal side, from the banking side, I think there's some push there to be looking at a percentage of your cattle to be priced or managed one way or the other.
From the rancher's perspective?
Well, no, even from the banker's perspective.
Right, but the banker's perspective with his ranch clients.
Exactly. Okay. Exactly. Yeah. In both places, whether we're talking about the cow-calf or whether we're talking about the feedlot. I think it's basically, there's so much volatility right now at either end of the scale that if there's ways to mitigate some of that risk, we're going to look at it.
Whether you have 50 cows or 2,000 cows, to sell them all the 14th of October is a huge risk.
Well, and again, with the volatility we've seen, maybe there's better opportunities. So I think we're starting to see more interest in, let's look at some different alternatives and try some different methods of marketing. So it's interesting, and I think it just keeps increasing from here.
Okay, that's another edition of the Beef Market Update. We'll talk to you again this time in 2 weeks.
Okay, sounds good.
Thanks, bye.